We all know that a market is a place where buyers and sellers meet. But what about the stock market? What brings buyers and sellers together? So these we have brought to you today, and we welcome you to the Financial Market Examiner YouTube channel, where you'll learn about forex, cryptocurrency, and the stocks markets. In this channel today, we'll talk about the stock market and how it works. Get your journals and other materials as we are about to get stuck in the stocks market. What is a stock market? Stock markets are venues where buyers and sellers meet to exchange equity shares of public corporations, allow buyers and sellers of securities to meet, interact, and transact. The markets allow for price discovery for shares of corporations and serve as a barometer for overall economy. Buyers and sellers are assured of a fair price, a high degree of liquidity, and transparency as market participants compete in the open markets. The financial activities are conducted through formal exchanges and via over-the-counter marketplaces that operate under a defined set of regulations. In the US, for example, the US stocks market is regulated by Securities and Exchange Commission and other local regulatory bodies. The first stock market was the London Stock Market Exchange, which began in a coffee house where traders meet to exchange shares in 1773. Today, the leading stock in the United States includes the New York Stock Exchange and the Nasdaq. Most nations have a stock market, and each is regulated by a local financial regulator or monetary authority or institute. Companies listed on the stock market exchanges are regulated, and their dealings are monitored by the SEC. In addition, the exchanges set certain requirements as a mandating timely filing of quarterly financial reports and instant reporting of relevant corporate developments to ensure that all market participants are equally informed. Failure to adhere to the regulations can lead to suspension of trading and other disciplinary measures. How does the stock market work? As said earlier, the stock market is regulated by a financial regulator which plays a big role in the function of the stock market. It therefore works in two ways. One, as a primary market, and two, as a secondary market. The primary market allows companies to issue and sell their shares to the public for the first time through the process of an initial public offering. This activity helps companies raise necessary capital from investors. A company divides itself into several shares and sells some of those shares to the public at a price per share. So to make this happen, a company needs a marketplace where these shares can be sold and be achieved by the stock market. A listed company may also offer new additional shares through other offerings at a later stage, such as through rights issues or follow-on offerings. This may even buy back or delist their shares. Investors will own company shares in the expectations that share value will rise or they will receive dividend payments or both. The stock exchange acts as a facilitator for this capital raising process and receives a fee for its services for the company and its financial partners. The secondary market. In this case, using the stock exchanges, investors can also buy and sell securities they already own. Functions of a stock market. 1. Ensures price transparency, liquidity, price discovery, and fair dealings in trading activities. 2. Guarantees all interested market participants have access to data for all buy and sell orders, thereby helping in the fair and transparent pricing of securities. 3. Ensures efficient matching and appropriate buy and sell orders. Who are the traders in the stock market? Traders on the stock market include market makers, investors, traders, speculators, and hedgers. And investors may buy stocks and hold them for a long term, while a trader may enter and exit a position within seconds. A market maker provides necessary liquidity in the market, while a hedger may trade in derivatives. So finally, the stock market is a component of a free market economy. It allows companies to raise money by offering stock shares and corporate bonds and allows investors to participate in the financial achievements of the companies, makes profit through capital gains, and earn income through dividends. The stock market works as a platform through which the savings and investment of individuals are efficiently channeled into productive investment opportunities and add to the capital formation and economic growth of the country. I guess you're no longer stuck, as we've taken the time to let you know about the stock market in detail. It's a means of gaining financial freedom through investments. So with this, we've come to the end of the video for today. There are several other videos where we talked about the financial markets. Remember, the post is not for financial advice, but for educational purposes only. Kindly share, subscribe, and like after watching. Thanks for watching.